In this video, I'm going to share with you an easy supply and demand trading strategy. Now, my friend, you can apply this to forex trading, you can apply this to cryptocurrency, you can apply this to gold. And in actual fact, I'm part of a Telegram group where we automate this whole process. So I don't really have to sit and monitor the charts all day and sit here in front of the charts the whole day. I can literally do what I want to do, which is very important to me because I want to create more time freedom to do the things that I love doing. Now, we'll get to that later in the video as to how you can join this now. You can become part of this. Now, why should you watch this video? Hi there, my name is Errol Mueller. I'm in actual fact the owner and founder of this business right here, Empire Digest. And I started my online journey back in the year 2015. I started forex trading in the year 2015. It is now 10 years later. I've traded forex myself. I used to sell a forex trading course. I've traded with forex trading robots. I do PAM trading. I'm involved in forex trading signals, and I do have a fair amount of knowledge when it comes to forex trading. Now, this strategy that I'm about to share with you, literally, there's one trade banged nearly 59 pips, and it's for a risk reward ratio of about 3.9. Call it, actually, it's slight, it was about 4 to 1. It was roughly about 4 to 1. Let me just move that up quickly. It was about a 4 to 1 uh, reward risk ratio, meaning 4 reward for 1 risk. And I'm going to play the trade out for you, and I'm going to show you the trade. So before we continue, on your screen right now is a disclaimer. Pause this video, take some time and read that disclaimer. Now, I'm no financial advisor, no investment specialist. I'm not licensed of any sort. So what I'm sharing with you is based on my own personal opinion. Okay, so looking at the easy supply and demand trading strategy. So firstly, I'm going to leave this up here. What you want to do is on your charts. Okay, I'm using TradingView. If you would like to, if you don't know what a charting software is and you want to use a charting software, my most recommended and easiest one to use is TradingView. In actual fact, if you want to get access to TradingView, the very first link below this video will bring you over to a page like this, which is my hub. It will be the Forex page. Now, you're going to use this link for few things. So the link right below this video is extremely important. So it will bring you over to a page that looks like this. It says Forex, and then scrolling down all the way to the bottom, it says Best Charting Software. You can click on the Learn More button, and then it will bring you over to this platform called Trading View. That is if you want to backtest your strategies, play with strategies, change them, amend them. It's got its own strategy tester that you can play with. So I do recommend Trading View. And then we're going to come back to this page right now. So especially this one right here, number one, recommended trading signals. Now, before we continue, let's get into the strategy. And if you enjoy what you're seeing now, my friend, give this video a like, give it a thumbs up, drop me a comment if you've got any questions. And in actual fact, on the top right-hand side of your screen right now is a notification popping up where I shared another video a while back of banking 10 pips a day. Every single day, you can do it on any time frame, mostly smaller time frames like your 5 minute, 15 minute, etc. But you can do it, my friend, day in and day out. As long as you set yourself a trading plan that you only want to bank 10 pips a day, then that's what you're going to work towards. Now, you're more than welcome to check out those videos. And it's all about trading doji candlesticks. In actual fact, this is the gravestone doji candlestick, or I call it the 382 Fibonacci retracement candlestick. Now, for the supply and the demand zone trading, firstly, let's quickly delete this. So what you want to do is on your chart, you want to open up the stochastics. So on the top left-hand side, you can click on indicators, and then you can just type in stock, and you can see you can click the stochastics. Once you click on this, it will open this thing right here at the bottom. And if you want to amend this, you can double click on it and then you can change all of it. But for now, this one is already set to what I wanted. 80 is extreme overbought conditions, and the 20 level is extreme oversold conditions. Okay, so that's important. Next, you want to add to your chart the EMA, exponential moving average. Now, what you can do, indicators, you go to EMA, moving average exponential. You select that one, double click on it, and you want to select your length to 200. Now, think standard, it comes out at 14. Then it will look something very similar to this, which I don't want. I want a previous 200 candles history. Okay, so 200, there we go. As you can see, we are trading above the SMA, or the exponential moving average, EMA. Now, firstly, I'm looking at buy trades. So everything above this line right here, we are looking at buy trades. Everything below the EMA, we are looking at sell trades. So bullish positions, various positions. Now, how do you determine What is a supply and a demand trade? How do you determine that? Where's the supply zone? Where's the demand zone? Now, in actual fact, firstly, as you can see, we are in an upwards trend. Market is trending very well, and you can see we are above the EMA. So that tells me we are in a bullish trend. And as long as we are above the EMA, I want to place bullish trades. Now, looking at this zone right here, let's quickly, in actual fact, let me draw a nice little rectangle for you. So looking at this zone right here, this formed a nice little demand zone. So as you can see, we had a red candle, and then there was some previous structure right here, some previous structure right here, which now acted. The markets came down, then it acted as support, and here it acted as resistance. Now, if I want to draw in a nice little line, I can actually do that and get as much touching points as I possibly can. Okay, so there we go. There you can see some nice resistance right there. Market comes down, support, 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 and then the market shoots up. Now, right here, this first green candle right here, the second, three, four. So we are looking normally at about 4 candles because we as small traders, when I say we trade with thousands of dollars, not billions of dollars, only the big players can move a market like this, my friend, create a zone like this. Now we are looking at 1, 2, 3, 4 candles. These 4 candles, firstly, the first candle is a nice big one. The second one is a nice one, which creates a fair value gap. Now, what do I mean based on a fair value gap? That means between the third candle, this one right here, the bottom of the wick, and the bottom of this one's wick, or you can work it at the open and close of the candle if you want to, you will see there's a nice little fair value gap. We call it a fair value gap. So from there to about there, that is what we call the fair value gap, meaning this candle, the third candle, does not come all the way down and touch the first candle's wick or anything of the sort. There's a nice fair value gap right there. And the wick also doesn't spike down to about 50% of the second candle. It's above the 50% mark. So that creates a nice little supply zone. And as we can see, it acted very nicely on this previous resistance and previous support zone right here. So we got 1, 2, 3, 4 candles. Then the market starts playing around, which was a bit of a volatile situation. In actual fact, I should have checked the news, of which I didn't check the news, and that's probably why. Now, what you want to do is also keeping in mind, so the market pushed up, and then the market comes slightly down. What I want to show you is, so the market does this. Let's, for example, use the trend line. So the market does this, market pushes up, and then from there, the market comes down for a smaller move, and then the market pushes up, bring in a new structure high, and then let's quickly bring down the chart. Then the market moves down. As you can see, it starts creating a bit of a consolidation. Then the market pushes up again. Then I'm going to go, it creates a very volatile spike there. And then the market comes, pushes down again. And then the market comes up. And then the market pushes down again. Now, this one right here, this is where we entered the trade. Now, let's do this. So what you want, this move, the up and the down, the retracements, all of that, you actually want the market to come down from this section right here, slowly downwards. In actual fact, when I say slowly, I would have preferred the market to do this. Okay, cancel, narrow arrow back. That, and then the market retraces a little, and then the market comes down again, and then the market retraces, and then you want the market to come down slightly. So you don't want the market to necessarily come down the way it came down yet. That was a bit volatile, of which took the trade, actually took the trade at a risk, which is wrong. Okay, you don't want to trade like that. You want the market to come down slightly, form a slow motion downward spiral back to this previous demand zone that we are busy identifying. Now, let's quickly delete all of this. I don't want to confuse you. So looking at the previous, how do we determine then where is the demand zone? So firstly, we've got the candles. We noted that these candles already identified a supply or a demand zone for us. So demand is upwards, supply is downwards. Bullish for demand, supply, sell. So always think of supply, sell. Okay. Now, this is then where the supply and demand zone would end up being. This previous bearish candle right here forms the demand zone. So from the top of the wick to the bottom of the wick, roughly like that, that then creates the demand zone for us. Okay, so then you watch the market as it plays out. So as the market then starts doing its thing and the market comes down, pushes up, down, down, you've got this long bearish candle. This is now where the stochastics comes into play. So firstly, we've identified the demand zone, which is this section right here, by the look of these candles, and now the market is pushing down. We are still above the 200 EMA, and now we are going to look at the stochastics. As you can see, this candle right here, this red candle, already identified on the stochastics that we are getting the price at a massive discount. It is way oversold, my friend. It is way below the 20 mark right there, as you can see on that red candle. So this was my indication to say the very next day trade, enter the trade, or the very next candle, enter the trade, which also forms then part of the demand zone that we identified. So it pushes down nicely into that demand zone. And as you can see, it immediately bumped off of that demand zone, and we managed to, it was an extremely quick trade, managed to hit the take profit 1, 2, 3, and 4. In actual fact, normally I would trade a risk 1 to a 2 reward. So 2 reward, 1 risk ratio. Now this ended up being a 4 reward, 1 risk. Why? So let me show you how you place this trade. So here was the trade which I've taken, which was a long position. And in actual fact, I want to enter the trade at this top right here, which is the top of this candle of the zone we identified of this bearish candle. I want to enter the trade right there, which I ended the trade. And then for my stop loss, I want to put my stop loss at least 10 pips below this section. Right. In actual fact, if you want to go a little bit more and offer up a little bit more of your reward, you can actually put your stop loss 10 pips either below this previous candle right here, or you can put your stop loss 10 pips below this initial previous spike here. You can even put your, if you want to, 10 pips roughly about there. And then that would then just give you a little bit less reward for a little bit more play in the market. Now, in actual fact, this is how the trade played out. So as soon as the next candle opened, the trade opens, and there we go. So I put for take profit, I would stop my take profit at around 10 pips, roughly about here, which is 10 pips between this section right here, the highest high of the previous high to about here. So 10 pips is roughly about there. So we can just move that up slightly. Let's do that. So just for example purposes, let's call this is 10 pips. 10 pips is around here, as you can see, but let's call that blue line the 10 pips line. So that gave us a nice little 4 reward, as you can see, risk reward ratio, 4 reward for 1 risk. Immediately, candle open, boom, 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 boom. On the fourth candle right there, hit the take profit 4. Okay, that is if you want to drag it out that far. So this trade offered a very nice risk reward ratio. And that is a very simple strategy, my friend, for trading. It's an easy supply and demand trading strategy. Literally, you just got to determine where would be your demand zone. If you're looking at selling trades, you've got to determine where's your supply zone, looking at the exponential moving average, looking at the stochastics, knowing where to place your stop losses, where to place your take profits. It's a very, very simple strategy. Now, my friend, if you don't want to go through all of this, if you would like an option to where you can literally just set it all up and it runs automatically. So I'm part of a trading signals group that is very rewarding, high profits, where all of this happens on your behalf automatically. You can get started with this. Let me show you quickly. Once again, the first link in the description below this video will bring you over back to the Forex tab. And then you want to click on this section right here. Number 1, recommended trading signals. Click the learn more button. Once you've clicked the learn more button, it will give you 4 steps of which I created for you, showing you how to get started with this signals group, my friend. I even included a bonus section for you in order to set it all up and how do you connect it all so it runs on autopilot. You don't need to monitor it. You don't need to watch it. You can just let it go. As long as everything is open and everything is connected, you should be good to go. Now, what does it look like? So inside the group, I've joined the gold. I get gold trading signals and I get forex trading signals. So for the month of January, look at this. January, here is our trading results for the 5 weeks of January because it was a 5-week month. We ended up with an account growth on the signal side of 14.41%. Now, I started late, unfortunately joined these automated signals late. So my account growth is only 2.5% for the month because I joined literally near the end of the month. So that is on me. But for the group, actually for the whole of January on the Forex side, had a 14.41% account growth, banking 520.6 pips. And on the gold side, another 5.44% account growth and banking 10,262 pips. So what does this all look like? So here with is my broker. As you can see on the top left-hand side right here, it's a real account, my friend, real money, $1,127.38. And this is what the group looks like. And this is the thing called the Telegram connector. So this connector must always remain open. In actual fact, I don't want to go into too much detail because on this step 1, 2, 3, 4, or step 3 bonus, I explained it all to you. And in actual fact, if you want to track my personal trading results, you can track my account here live, which is a live account with my MyFX book results right here. So I would highly suggest click the link right below this video. Go through all of this, my friend. Go through those steps. Set it up if you feel like you don't want to sit and do exactly what I've done yet. Determine your own supply and demand zones. Where must you enter the trade? Where must you exit the trade? You don't know how to read the market yet. You just want to enter something where it's all set up for you and it automatically trades on your behalf. Then I would recommend this, my friend. Once again, the first link in the description below this video. And if you like this video, give this video a thumbs up, give it a like, because it helps this video rank as quickly as possible within the search engines in order to help more individuals like yourself make an informed decision. And if you enjoyed this video, drop me a comment. If you've got any other questions, also drop me a comment. Thank you for watching. Stay tuned, and I will definitely see you in my next video.